President Donald Trump delivered a wide-ranging speech in Detroit, Michigan, where he claimed that under his leadership, the U.S. economy has been rebuilt in just 11 months. Trump said that economic growth is accelerating, productivity is rising, investment is booming, incomes are increasing, and inflation has been defeated. He also claimed that the United States is now respected around the world more than ever before. However, official data presents a more mixed picture. In December, higher costs for food and rent pushed consumer prices up again. This shows that inflation pressures are still being felt by everyday Americans, especially when it comes to basic living expenses. The job market also shows signs of weakness. Job growth has been slow, and last month the manufacturing sector lost around 8,000 jobs nationwide. These numbers raise concerns, particularly in industrial cities like Detroit, where factory employment plays a major role in the local economy. Public frustration over affordability is reflected in recent Reuters, Ipsos polls, which found that Trump's approval rating on cost of living issues stands at just 27%. This suggests that many Americans are not convinced that the economy is improving for them personally. While visiting Michigan ahead of the Detroit Auto Show, Trump tried to refocus attention on U.S. manufacturing. But experts say the outlook for factories remains uncertain, with employment levels now dipping below those seen during much of Trump's first term. Another notable aspect of the speech was its lack of focus. Although it was billed as an economy-centered address, Trump frequently shifted topics. He spoke about immigration, criticized former President Joe Biden, discussed transgender athletes, and even addressed Venezuela. At one point, Trump said the United States would work with Venezuela and help make the country strong again. According to reports, this focus has caused frustration within Trump's own party. Some Republican lawmakers and White House aides want him to concentrate more on economic and healthcare concerns during an election year. Trump is expected to travel across the country ahead of the midterm elections, speaking directly to voters and highlighting what he describes as his economic accomplishments. The key question remains: will Trump's economic claims resonate with voters who are still struggling with high prices and job uncertainty? Or will Americans judge the economy based on their daily cost of living? That decision now lies with the voters.
Iran is on my mind.
U.S. President Donald Trump commented on the situation in Iran, saying the country is on his mind as reports emerge of ongoing deaths and violence. Trump said his team was working to obtain accurate information and confirmed numbers about what is happening on the ground. He noted that while early indications suggest the killings could be significant, he wanted to wait for verified details before drawing conclusions. He said he expected to receive clearer information within a short time and emphasized that any response would depend on confirmed facts. Trump added that the United States does not want to see people being killed in Iran and expressed concern for the safety and basic freedoms of the Iranian population. When asked whether he would like to see democracy in Iran, Trump said that while democracy would be ideal, the more immediate goal is to see an end to violence and greater freedom for the Iranian people. Overall, his comments focused on concern over loss of life, the need for accurate information, and a desire for improved human rights conditions rather than outlining a specific political plan. U.S. stocks ended lower on Tuesday, with all three major indexes finishing in negative territory. The Dow Jones Industrial Average fell about 0.8%, while the S&P 500 and the Nasdaq both slipped slightly by the end of the trading session. Financial stocks were among the biggest losers. Shares declined after comments from J.P. Morgan Chase executives increased concerns about President Donald Trump's recent proposal to cap credit card interest rates. J.P. Morgan CEO Jamie Dimon warned that such a cap could actually hurt consumers, rather than help them. Following those comments, J.P. Morgan shares dropped around 4%, while Visa fell roughly 4.5%. Investors were also reacting to fresh inflation data released earlier in the day. The December inflation reading came in exactly as expected, disappointing markets that had been hoping for a bigger slowdown in price pressures. According to Eric Lynch, a co-portfolio manager at Sun Coast Equity Management, the report reduced expectations that the Federal Reserve will cut interest rates at its upcoming meeting later this month. Markets had grown used to multiple Fed rate cuts over recent meetings, and some investors hoped that a much cooler inflation number would give the Fed room to cut again. However, while inflation eased slightly, it remains elevated, leading to the realization that rate cuts are unlikely in the near term. Other notable stock moves included Adobe, which fell about 5.5% after brokerage firm Oppenheimer downgraded the stock, citing slowing growth in its digital media business. Meanwhile, Boeing shares rose around 2% after the company reported its highest annual aircraft deliveries since 2018, offering a rare bright spot in an otherwise weaker market session. Overall, markets closed lower as investors weighed inflation concerns, uncertainty over interest rate cuts, and potential policy changes that could impact the financial sector.